Hello, everyone, and thank you for joining us today for our session on Freddie Mac's affordable products and solutions. I'm Rachel Branson, the Professional Development Manager here at NC Realtors, and I'm excited to have all of you join us today. Before we get started, I'd like to let you all know that today's webinar is being recorded and that it will be made available on our website along with copies of all of the slides from today's presentation. Please also know that you can submit any questions that you might have in the Q&A field at the bottom of your screen, and we'll do our very best at the end of today's session to address all of those questions. With that, I'd like to introduce you all to today's moderator. Jim Hall is the Single Family Affordable Lending Manager at Freddie Mac. He promotes the Freddie Mac HFA Advantage Mortgage Program to both lenders and realtors, and he is going to lead today's conversation with our panelists. Jim, thank you for joining us.
Thank you, Rachel, and thank you to NC Realtors for giving us this opportunity. We're really happy to be able to spread the word on our affordable products, to the realtor community in North Carolina. Due to the pandemic, Freddie Mac has been presenting webinars throughout the nation to discuss our affordable lending programs. We had to make a pivot. Myself and our team usually do these events in person because we like the personal touch to see, make eye contact and be able to shake hands and have conversation after these events. But again, this is the pivot we had to make, and we feel that it's very vital for us to still get out there and get the word out there. My background has been in affordable lending for quite a long time. Prior to coming to Freddie Mac, I worked at a housing finance agency in New Jersey for 12 years. And I've been an advocate for the underserved for, quite a long time. So we're gonna have a very, very exciting and informational discussion today. We have a great group of speakers. To end our presentation, we'll have one of my colleagues, Monica LaCrue. She's part of our realtor engagement team, and she's an affordable lending senior. And she will discuss very important resources and tools that we provide to realtors at no cost, and that will be part of our PowerPoint presentation also. And I'd like to point out that our PowerPoint presentation, we will provide it to Rachel, and she'll be able to post that, on the NC Realtors website. So all of you will be able to have access to it and to the important information and links that we're going to provide to you.
Wonderful.
Also, we're very, very happy to have Jane Cavanaugh from the North Carolina Housing Finance Agency to speak today. The Housing Finance Agency is an important partner for Freddie Mac, and we do a lot of business with them, and we're excited to have Jane today speak to you all. And if you notice, I said y'all. Okay, I'm from Southern New Jersey, right outside of Philadelphia, and we normally say use guys.
Use guys, yes.
Yeah. And Jane's colleague Bill Hobbs, I don't know if you know him, but I was traveling with him last year, and he told me that to endear myself to people in North Carolina, I had to change the way I speak a little bit and throw in a y'all instead of a use guys. So
you did it perfectly.
Thank you. I did that to Bill. So Jane, please let Bill know that. And then, with that, our first speaker is another colleague of mine, Marlena Scott. She's an affordable lending manager for our realtor engagement team. And Marlena is going to discuss some really, really interesting demographics, statistics, the mortgage readiness of borrowers and prospective buyers. And with that, coming to you from Pittsburgh, PA, Marlena, it's all yours.
Thank you. And in Pittsburgh, we say yins. So I thought I'd get in on how we address people. So thank you so much for having me, and good afternoon, everyone. Thank you, North Carolina Realtors, for having me today as well. I'm very excited to share some of the great information that we actually have for you. And I'm glad that you all took time out of your schedule to participate. You being the realtor are really the trusted advisor in the housing process. And so investing in your continuous education is key to not only helping home buyers achieve home, but also growing and enhancing your business. So we can go ahead and get started there. Next slide. All right, so before we dive into today's information, I wanted to share a little bit about Freddie Mac and what our role is. So this year we were actually celebrating 50 years of home, which is a huge accomplishment, I think. Freddie Mac was actually chartered in 1970, and we actually operate in the secondary mortgage market. What that means is we do not originate loans. We buy our loans from our lenders out there. So our mission is to promote liquidity, stability, and affordability in the housing market. Our community mission is to stabilize communities, prevent foreclosures, expand credit responsibly, educate future home buyers as well as counsel homeowners, and to support affordable rental housing. The three main lines of business are single family, multifamily, and capital markets. And Jim, myself, and Monica are all part of the single family line of business. Next slide, please. So our role, as you probably know, is more important than ever at this point. With the impact of the COVID-19 pandemic, it has created some of the biggest challenges that we've seen. Since March 2020, unemployment has been at historic levels, and the overall spending has actually declined. There's still some optimism that we will bounce back, but it will be a slow process. In regards to our housing inventory, and I'm sure that you are seeing on a regular basis, it continues to be scarce. New home sales have declined. But with that, we realized the government and Freddie Mac realized that there is such an issue out there. So we wanted to get involved and help. And so we've been able to do that through our forbearance offerings, as well as some of the payment deferrals, and helping homeowners and renters pause some of the evictions out there. The CARES Act actually helped us, help the housing market to mute some of the impact as well. So that was a positive through that. Next slide, please. Now with that, you've probably seen that the overall mortgage rates have been declining. Refinances are on the high because they're taking advantage of this time for lower interest rates. And this is something that we expect to see even going into 2021. The next slide. And as all of you have probably felt, so talking about the housing landscape, all of you realize that it has shifted over the last several months due to the impact of the COVID-19 pandemic. Due to restrictions that were placed in the early part of the spring, it did impact, of course, that home buying season that we normally see. I've heard from several of our industry partners out there that we've really seen that kind of pause into the summertime, but still not to the level that it normally is. The home sales may be slower to bounce back in the coming months, just because we aren't sure if potential buyers will come back to the market. But with that, the positive thing to help kind of stabilize the mortgage market is we've seen the Federal Reserve step in and actually purchase some of the mortgage-backed securities to help keep everything moving and to bring the mortgage interest rates further down. So we can go to the next slide. So with that, we are expected to regain momentum as long as the contraction kind of stays where it's at. If it does go longer, we can project that some of this will maybe not regain momentum as fast as possible, but we do see, according to our economists at Freddie Mac, that is going to be the outlook for 2021. Now, with all of this information that I'm sharing, that's a very high level to show you where we are currently from an economic standpoint, but also from a housing standpoint and the market wise. But these next couple slides, I'm really going to dive into is how not only the market is changing, but also your home buyer is changing. So I like to call this changing face of the home buyer or buyer of the future. The demographics of the overall in the US are becoming more younger, as well as a lot are more diverse. You can see on this slide, this is a snapshot basically of what the demographic breakdown is through 2018 of the overall United States. You can see on this slide that African Americans and Hispanics tend to be younger than the overall population. They also, in addition to millennials, tend to have lower income and low credit scores. The reason why I want to point that out is because your buyers that you come in contact with, millennials, for example, they aren't making as much as they may be expecting or we would expect to see. And sometimes their credit is actually showing lower. And the reasons why that happens is because some people just don't have established credit. So I want to bring that to the top of mind when you're working with your buyers, that just because they have a lower credit score doesn't necessarily mean there's negative credit impacting it. It could just potentially mean that they have not established enough credit. And so with a little coaching or some help or guidance on some financial education, you could potentially get those buyers ready for home ownership. In addition to that, you can see that the Gen X, the Gen X generation actually has the highest debt level, followed by the older millennials as well. Okay, next slide. Thanks, Monica. And in addition to what I said earlier was the US is going to become more diverse, and you can see the breakdown of that by age category. So in the next several years, decades, we do expect the non-Hispanic white population to actually shrink to 49.7%. So there will be a larger shift in demographics overall across the board in the many years to come. Next slide, please. So what does that mean for the first-time home buyer? The first-time home buyer, according to the 2019 National Association of Realtors profile, is making up to about 33% of the first-time home buyers, which is a decrease year over year. The highest we've seen in the last several years is back in 2013, where they represented 38% of the market. So you can see this market is potentially shrinking. The age of the first-time home buyer is at 33 right now, and the median income is about $75,000. Now, I want to say a caveat with the $75,000. I know that there are different markets all over the country, and this may not necessarily be the average in where you are living. And we're actually going to take a look at that later on in the presentation. But with that, I want to talk about the makeup of the first-time home buyer. So if you're looking at the screen right now, you can see that the single female is actually accounting for 18% of first-time home buyers. This is a shift that we've seen over the last several years where women are starting to become head of households. They're also taking initiative with achieving that home ownership. Also, the unmarried couple is making up to 16%, whereas years ago, we wouldn't normally see that. We would see that bucket kind of fall into the married bucket. So I just want to bring that to your attention that first-time home buyers are changing. They're not going to be your stereotypical buyer that you've seen in the past. Another thing I want to point out on this screen is that 26% of first-time home buyers use FHA loans and 12% use VA loans. Oftentimes they get into the FHA loans because they don't have low down payment options or solutions. Jim Hall is going to speak about one of those options later, but I also want to bring into your attention that Freddie Mac does have Home Possible, which is our 3% down conventional mortgage product as well. And I'll touch on that in a little bit. But I wanted to bring that into your attention. There are different options out there from a product standpoint for your first-time home buyers. Next slide, please. So homeowner, and according to our study or our development that we've done at Freddie Mac, we created what we wanted to identify mortgage ready. This isn't something that's used within the industry, but it's something that Freddie Mac wanted to take a look at and analyze. So mortgage ready to us means this individual is under the age of 45. Their credit score is greater than or equal to 620. They have a total debt to income less than or equal to 25%. There's no foreclosures or bankruptcies in the last 84 months, and there's no severe delinquencies. With that, and when we broke down based off of that criteria, there is a population of 37 million mortgage-ready individuals across the country. When we broke it down even further, because of course, to hit home on the repeated message that I've shared so far is that your home buyer is going to be younger and more diverse. So you have 24 million mortgage-ready millennials, 4.3 million Asian Americans, 7.8 million Hispanic Americans, and 2.9 million African American mortgage-ready individuals out there. So what does this mean for your business? This means that while sometimes we are seeing that it's shifting, that people, you know, especially millennials, aren't looking to get into home, they're reaching the age right now where they're going to make up to the biggest portion of first-time home buyers. So how are you going to prepare your business and your strategies to capture some of this market? So with that, next slide, please. Let's take a look at what's going on in your market. So what we wanted to do was I wanted to bring you the information from the US nationally, break it down to North Carolina and then the surrounding counties in which you serve to really identify your age makeup or your population makeup in these particular markets. As you can see, most of them fall into the 25 to 34-year-old bracket, meaning they are millennials. Then there's also a large portion that fall into the 35 to 44-year-old bracket. So what does that mean? That means that these are people that are going to be ready for first-time home ownership, or these are going to be people, home buyers or future clients that are going to be ready to either upsize because of family. They're creating families. So this is opportunity that's available in your market based off of age and location. Next slide. So as I mentioned before, we know the income is different across every different area, every demographic. So it's important to see what the income looks like in your area. Overall, you can see that the income trends per each demographic. And most of the areas that are in the select North Carolina counties that we picked out have an average income of over $60,000. So that means that there are a lot of people in the area that are mortgage ready and are able to get in there. And we'll talk about their credit next, just to see how ready they actually are. And you can go to the next slide. So this one is to show you exactly who already owns a home and who is currently renting. You can see North Carolina overall, 66.4% are homeowners, 33.6% overall are currently renters. But in your markets like Cumberland, where there's a 46.5% renter occupancy rate, these are your potential home buyers to get into a home, because we need to change the narrative. Renting is great and it does fit the needs of many people, but home ownership helps them build wealth as well as establish themselves. So that's an opportunity there. And you can see that it trends pretty well over the average across all the different counties. Next slide. And so with this, the average credit score right now is 694 in the US overall. I know that in the previous slide, we saw that it was a little bit higher, but as of 2020, the average credit score is 694. Most of the areas that we have pulled information from in the counties are averaging slightly lower than the overall US average. But with that, going back to the mortgage readiness, anything over 620, we consider to be ready for home ownership. So with that in mind, there are the first-time home buyer is younger, more diverse. There's credit potentially challenges, but that just means they could be credit invisible. But there are products through Freddie Mac that are available to address those needs. And Jim is going to be talking about those in a moment. And so if you can, I'll wrap up with the last slide here and just talk to you a little bit about Home Possible. So Home Possible is one that we have. It's for first-time home buyer, product that we have for first-time home buyers, as well as very low to moderate income home buyers. There's opportunity through this product to refinance. And this product really does help address the changing demographics, as well as help those millennials, the multi-generational households, everyone kind of get into home. It's good for condos as well as manufactured housing as well. So I just wanted to share a little bit of information. I know that was a lot. Please let me know if you have any questions, and thank you again for having me.
All right, great. Thank you, Marlena. That was tremendous information. We did have a question in the chat box if we could provide more statistical information for other counties. Our analytics group can provide that. So please email to Rachel at NC Realtors any counties that you would want additional statistical information on, and then Rachel can forward that to me, and then we will put that request into our analytics group. But again, Marlena, tremendous information. The mortgage readiness information I always find critical. It identifies certain areas in the marketplace for realtors to identify potential home buyers. The millennial part really hits me in the heart because I have 2 millennials here at home, and after this event, tonight I'm going to let them know that they're mortgage ready, and it might be time for them to move out of here. Okay, but
catch the hint. So there is one question that just came in. I'm sorry, I did see that, but so we selected 45 and under. Based off of our research and analytics team, I can find out more information as to why it was 45 and under. And they tend not to be homeowners too. And the household income limit is 80% of area median income for the Home Possible program. And we can also include, Jim, if you want to, some flyers for Home Possible as well.
Yeah, absolutely. Great. Thank you, Marlena.
Thank you.
Okay. All right. Well, at this time, I want to speak to everyone about housing finance agencies. In the industry, we use the acronym HFA. And as I had mentioned earlier, I'm an ex-HFA person. I have 12 years at New Jersey Housing. And it's really important to know what a housing finance agency is before I, discuss, what we offer out there and our partnership with North Carolina Housing Finance Agency. In the mid-1960s, when Lyndon Johnson was president, he had a vision for America. It was called the Great Society. And within the Great Society, he's most famous for the Civil Rights Act and the Voting Rights Act. But within the Great Society, there was a component for affordable lending and housing. And what Johnson's administration wanted to do, they wanted to make the American dream available to low to moderate income folks. And by doing this, they knew they couldn't do it all on a federal level. So what they did, they went to the states and counties throughout the nation to sell this idea, and many states at the time bought into it. And through the 1960s, 1970s, and 1980s, housing finance agencies started to be born within states and counties and locales. And it just made sense because the states and the counties understand each area that they lend in. So that's why Johnson's administration didn't want to do it on a federal level. So it made total sense. And my old housing finance agency was created in the late 1960s. Jane will be able to share the information when North Carolina Housing was created. But with that, the housing finance agencies are instrumentalities of government. They have charters, they're mission-based, and like Freddie Mac, and Marlena mentioned earlier, we were created in 1970. This is our 50th anniversary, and we were chartered by Congress, and we're mission-based also. And our mission is to bring liquidity, stability, and affordability to the marketplace. So with that said, what we provide to housing finance agencies is a source of liquidity. So lenders, they use a program called HFA Advantage, which we tailored specifically to be used through housing finance agencies. Okay, so the lender will originate the HFA Advantage loan and use the housing finance agency's down payment assistance program and deliver it through North Carolina Housing. And then North Carolina Housing delivers that to us. The Home Possible loan that Marlena mentioned earlier, that is a product that our lenders use and deliver directly to Freddie Mac. So that's a distinction between the two. HFA Advantage gets its DNA from Home Possible. Home Possible is our marquee product. It's used throughout the nation, and and it is capped at 80% AMI. Income limits on HFA Advantage are determined by the Housing Finance Agency, and Jane will go over their specifics at North Carolina Housing in a few moments. Also, the Housing Finance Agency determines the education requirements with this loan. Monica, if you could advance the slide, please. Okay, so essentially, this is a 3% down program, just like Home Possible. So it's a 97% LTV, which makes it a more affordable option than an FHA loan, which is 3.5% down. Please advance the slide, Monica. So again, it's 97% LTV. If you look to the left, it's 105% total loan to value. And what that allows is North Carolina Housing to put a second mortgage down payment assistance loan behind our first. And as I had mentioned, the HFA sets the income limits and develops the homeownership education curriculum. Each loan is underwritten through our automated underwriting system, which is Loan Product Advisor, and people use the acronym LPA in the market. If you look to the right of this screen, we're very proud of the support that we provide, and they have people like myself, Marlena, and Monica doing educational events like this, and we also do, when we are allowed, many in-person events. So when travel restrictions are reduced, hopefully we'll be able to do these type of events in North Carolina with all of you, and we're looking quite forward to that. And if you could advance the slide, please, Monica. And here are some specifics to the HFA Advantage program. It's for one unit. Okay, so that's a difference with Home Possible. Home Possible allows 2 to 4 units. So please keep that in mind, that if you're using this program through North Carolina Housing, it's for one unit only. It's for purchase and no cash out refis. As I mentioned, the LTV is 97% and the TLTV is 105%. And we use LPA as our underwriting tool. There's no reserves required. And we have flexible mortgage insurance, which makes this also a great alternative to FHA lending. And please advance the slide, Monica. This is really, really important. On a standard mortgage insurance coverage, on a conventional loan at 97% LTV, the consumer pays 35%. Okay, on Home Possible, it's reduced to 25%. But our HFA Advantage has the most affordable mortgage insurance coverage that Freddie Mac offers at 18%. So that's almost half the savings for the consumer if they're able to go through North Carolina Housing and take advantage of the HFA Advantage program. And advance the slide, please, Monica. And here's a nice comparison for you that compares HFA Advantage to an FHA loan and points out how much more affordable HFA Advantage is. The mortgage insurance on the HFA Advantage loan sunsets at 80% LTV. That means it will go away. On FHA loans, it stays there for the life of the loan, and it's very costly for the consumer. Also, FHA has upfront premiums, at which the HFA Advantage loan does not. So that also increased the cost to the consumer on an FHA loan. And it's also important to know that MIs required regardless of LTV on an FHA loan. And on conventional loans, it's only at 80% LTV or higher. And advance the slide, please, Monica. So these are our 3 affordable products that we offer. Again, HFA Advantage can only be used by lenders through North Carolina Housing. Home Possible and Home One are delivered directly from lenders. So Home One, which we really didn't discuss, that's also a 97%, 3% down program, but there's no income limits on that. So on that loan, the consumer pays 35% MI, okay? But again, the advantage there is there's no income restriction. So with that being said, I did notice in the chat, one person said I look like the actor Mandy Patinkin. I thank you for that. I wish I had his talent and obviously his career, but that didn't work out. But thanks for that comment in the chat room. That was quite humorous. And with the ruby red slippers here, yesterday up in New Jersey, and I'm sure you had it in North Carolina, we had a hurricane, and we did have tornadoes in Cape May County here in New Jersey. So we got Dorothy's ruby red slippers here to let me know it's my time to stop talking here and turn it over to our friend Jane Cavanaugh from North Carolina Housing, and she will do a deeper dive into the affordable programs and services offered by North Carolina Housing. So thank you for your time.
Thank you, Jim, Rachel, Marlena, and Monica. Thanks for having me here today. If I could have Jim's beard, I would be so happy. I have found that the benefit of wearing a mask is that I look better. So I am thinking of just keeping masks as a permanent fashion accessory. So I'm with North Carolina Housing Finance Agency, and we have been in business in North Carolina since 1974, and we've done a lot of good work across the state. Not only do we do affordable home purchases, which is what we do in my department, but anything to do with low or moderate income housing in the state of North Carolina, for renters, for urgent repair for seniors, all of those things. There's an expert at North Carolina Housing for all of those things. I am not that expert. I'm an expert on what we do in my department, which is the Home Advantage Mortgage, which utilizes the conventional product that we were just talking about, the HFA Advantage. We do the NC First Home Advantage, which is our $8,000 down payment assist, which is for first-time home buyers. And then we do the mortgage tax credit, which can be used in conjunction with some of the other loan programs. So if you want to slide on to the next page, let's see what we've got. Our mission at North Carolina Housing is to create affordable housing opportunities for North Carolinians where their needs are not being met by the market. I've done this once or twice, so I know that slide. What do we next? See all those people in North Carolina? So we have more than 100,000 home buyers who've taken advantage of our products, and we've done put billions back in the economy of North Carolina. Okay, where are we going now? I'm always excited to see what's next. So the North Carolina Home Advantage Mortgage. Well, not there. When I said next, I didn't mean to move the slide. There we go. Okay, so the North Carolina Home Advantage Mortgage is the product that is our easiest product to use. I like to think of it as the gateway product at North Carolina Housing for your home buyers and for realtors and for lenders, because it is not limited to first-time home buyers. It's available for your first-time and your repeat buyers. The interest rates on our products are incredibly competitive, and one of the great advantages we have over other loan products, and why your loan officer might send your customer to North Carolina Housing, even if they're not first-time buyers, and even if they have their own down payment, is that we don't have any pricing adjustments on our interest rates. So your customer with a 640 credit score gets the same interest rate on the North Carolina Housing loans that they would get as if they had a 740 credit score. So we make housing more affordable by keeping the payment down, by keeping that interest rate level for folks across the state. And that's true for our conventional loans. Generally, when you see a pricing adjustment, you see that it's most dramatic when you're doing a conventional loan, but it affects FHA, VA, or USDA financing as well. So on our HFA Advantage product with Freddie Mac, your customer that can qualify for that product, as long as they can get their LPA approval, that 640 credit score is going to get the same interest rate that a 740 credit score would get. We offer on all of our Home Advantage mortgages down payment assistance. So because that conventional product goes all the way up to 97% on the primary mortgage, our down payment assistance on our conventional loans is 3%. Now we do calculate that DPA based on your loan amount and not on the sales price. So a $100,000 loan would be a maximum loan of $97,000, 100,000 sales price. Max loan of $97,000 means you got to have $3,000 difference but we calculate the DPA on that loan amount of $97,000. So 97,000 times 3% is $2,910. So on our conventional loan products, your customer has to have $90. And that $90 can actually come from gift funds or other sources of down payment assistance. It can come from, of course, your borrower's savings. And then the rest of the money they need for closing expenses can be seller contribution. So it is a wide open product that makes home ownership so much more accessible to so many more North Carolinians. And one of the things that I think we all learned from 2008 on through 2020 is that if you have any money in the bank, maybe the best place to keep it is in the bank, and maybe not use all of your money to buy a home. Home ownership is a great thing, and I want as many people to get it as want to have it. But to buy a home and not have anything left in the bank is probably not the best idea in the world. And so the down payment assistance can give a comfort level to those folks who may want to buy a home, but as housing prices go up, it's harder and harder to save that money. And so that DPA can come in there as sort of a stopgap for those folks. Our down payment assistance is available for FHA, VA, USDA, for Fannie Mae and Freddie Mac conventional loans. You can combine our Home Advantage mortgage with our tax credit, the mortgage credit certificate, and you can use the HFA Advantage with our $8,000 down payment assistance program as well, which we're going to talk about more here in a minute. So the regular Home Advantage mortgage is for move-up or current buyers. You do not have to be a first-time buyer to take advantage of our products. You do not have to be a first-time buyer to get the HFA Advantage products, the Freddie Mac products, Home Possible. None of those. You don't have to be a first-time buyer. It's where your income is that makes you eligible for those products. All right, now I'm ready. Our down payment assistance. So all of our down payment assistance is a loan. It's not a gift or a grant. It's a loan that is forgivable over time. If your customer lives there long enough, it fully forgives. It starts forgiving for us in years 11 through 15, and it forgives at 20% per year. So if your customer lives there for 15 years, they never have to pay back that down payment assistance. Now, it's not a gift or a grant, it's a lien, but it's a silent second. So there's no interest rate, there's no cost for that second mortgage. So your customer is not accruing any interest on it. It just sits there waiting for them to refinance or sell and forget that they owe it. But if they live there long enough, it goes away completely. So 3% on conventional loans, 3 or 5 on FHA, VA, and USDA, depending on your underlying loan guidelines. And the lender helps your borrower select that, and then when they register and lock that loan with North Carolina Housing, that's when they select what the interest rate is and what their down payment assistance level will be. Okay, I'm ready to go to the next one. Who would be eligible for the NC Home Advantage mortgage? Basically, anyone who is purchasing a new or existing home in North Carolina, as long as it is going to be their primary residence. So you can have somebody that's moving from Michigan into North Carolina, and as long as they're purchasing their primary residence here, we don't have to have a history from them that says that they have been here in North Carolina already. The annual qualifying income for our regular Home Advantage mortgage is $92,000. So we have 3 products at NC Housing. We have our Home Advantage mortgage. We have our NC First Home Advantage mortgage, which means that your borrower has to be a first-time buyer, and that one carries an $8,000 DPA. And then we've got the mortgage credit certificate. On our regular NC Home Advantage mortgage, that is a mortgage-backed security, then the maximum income is going to be $92,000, but that is qualifying income. And qualifying income is just that the income that the lender puts on the loan application. It's just the income that the borrower needs to be able to prove that they can make the house payment and that they're a reliable home buyer. The lender looks at their credit, looks at their income stability, and looks at, do they have sufficient income? So $92,000 is the amount of income that is sufficient. So $92,000 or less. So that means that if your customer makes more than that, but they only need $92,000 for qualifying, their income is $95,000. $5,000 of it is overtime or bonus. They can qualify for the house they want to buy on $90,000. Then the lender is not obligated to put overtime or bonus or child support or commission on the loan application. So $92,000 is qualifying income, and that's incredibly important. because as Jim said earlier, the HFA Advantage product is based on area median income. Your maximum is 80% of area median income to be able to get that charter level PMI and to be able to get that HFA Advantage. So it's based on qualifying income, which means that we're looking at just the income your borrower needs to buy the home. We don't have to look at child support, commissions, bonus, spouse's income. It gives the lender the opportunity to find the very best buy possible for your home buyer. So annual qualifying income, $92,000 or less, a 43% debt to income ratio. So 43%, that's what we call a back ratio, and that means that the customer's house payment and any other debt, and by that I mean car payments, credit cards, student loans, it can't be more than 43% of their gross income. Now, many lenders, if you do FHA or Freddie Mac and Fannie Mae, they will allow your back ratios to go up above 43%. But part of our mission at North Carolina Housing is to have affordable and sustainable home ownership. And since many of our home buyers, I think our average income level for the North Carolinians who use our product is in the high 40s. And so 43% of somebody who is making $4,000 a month, 43% of that income is a lot more significant than it would be for somebody who made $10,000 a month. There's a lot more left over if you make $10,000 a month, between $4,300 and $10,000 than there is if you're making $4,000 a month. A lot less to live on because your taxes, your federal and state, and all your living expenses come out of that remaining 57% of your income. So 43% is our back ratio. No, we don't have a front ratio. And what that means is if you don't have any other debt or you're not debt heavy, then your front ratio can be 43. And as long as you can get LPA to approve it or FHA to approve it, then we will take it. If your underlying loan product like USDA has a front ratio, you have to meet your underlying loan guidelines first. So always meet your underlying loan guidelines, and then you're also going to add our overlays, these rules, to your underlying loan guidelines. One of our guidelines is that your borrower has to have a minimum mid or low credit score of 640. Normally, when the lender pulls credit report, they're going to get 3 scores back. They're going to pull from 3 repositories. The way it works is we take the middle score. You throw out the high and the low, and you keep the one in the middle. We require that your borrower have at least 2 scores. So each borrower on the loan application has to have 2 credit scores, and the low score cannot be lower than 640. So 3 scores, we take the one in the middle. 2 scores, we take the low one, and it has to be 640 or above. When you see that 660 on there, that's going for manufactured housing. So we do offer new, never occupied manufactured housing on the government products. It has to be on a permanent foundation, double wide or bigger. And that is a riskier product, and that has a higher credit score, and that requires a minimum of 660 on the credit score. For conventional borrowers that are at or below 80% of the area median income, they're going to get something fabulous, which is that charter level PMI. So as Jim showed you the chart where it's 18 as opposed to 35%, that's an incredible savings for your home buyer. Now, how area median income is calculated doesn't have anything to do with our $92,000 or our first-time homebuyer income limits. That area median income comes directly from the Freddie Mac lookup tool. Is it the Home Possible lookup tool? Is that what it's called? And if Rachel doesn't have that link, I'm sure we can send that link that it will come out to you. So you can look up any property address on that lookup tool. It will tell you what an area median income is, and then it has a blurb and it tells you what 80% of the area median income is. And then you'll know if your buyer's income, if they want to tell you, or you can tell them and show them where it is, you'll know whether or not they would be eligible for that charter level PMI. Mortgage insurance is a great thing, because it allows your borrower not to have to save 20% to make a down payment with. And that's wonderful, but it's insurance, and insurance means that it's there to protect you against default. So nobody wants to pay more for insurance than they have to. I mean, I want my new car and I want it to be fixed if I run into a pole, which I've done a couple of times. I want it to be fixed, but I don't want to have to pay any more than necessary to get it fixed. And so you don't want to have to pay any more than you have to get mortgage insurance. And that HFA product allows you to pay the least amount of insurance if you're below 80% of your area median income. I was starting to advance the slide and I can't do it. So will you take us next? So what kind of properties are eligible for that housing finance agency product? Basically, any single family home that you have. Any single family home or modular home on a permanent foundation is going to be eligible for it. Townhouses, condos, and duplexes that are approved by the underlying investor. New manufactured homes if you've got a 660 credit score on a permanent foundation. For conventional programs, you're going to be limited to single family homes, townhouses, investor approved condos, and I don't remember what the last thing was on there. No duplexes, right? So you can buy half a duplex and live in it, but you can't buy both sides and rent out that one. Okay, now I'm ready for the next slide. So now, and you know all the answers. Does your customer have to be, where are we? Borrower has to be a first-time home buyer to use the NC Home Advantage mortgage, and you know that's not true. That's false, right? And qualifying income includes income from all occupants, and on our regular Home Advantage mortgage, that would not be true. Okay, let's talk about CPLP. So in addition to our regular Home Advantage mortgages, we offer a big down payment assistance through our sister department at NC Housing, and it's called the Community Partner Loan Pool. And that CPLP offers a 20% down payment assistance, and your borrowers do not have to be first-time home buyers to get it, but they do have to be at a lower income limit. And that income limit is not going to be 80% of Freddie Mac's AMI, and it's not going to be 80% of ours. It's going to be 80% of whatever the federal home money is that they are using this product for. Can we skip back to the slide before this? Okay. Borrowers have to be at 80% of area median income. They have to use a community partner. Now, a community partner is someone in your area that has homebuyer education classes that they do. They work with your customer on budgeting. They have to attend a full 8 hours of homebuyer education to use the community partner loan pool funds. But it's up to $30,000. And this can be stacked with our regular 3 or 5% DPA or our $8,000 DPA. Or if you're in an area that offers down payment assistance, like Wake County has a DPA, Durham, I believe, does. I know that Guilford and Forsyth, Greensboro, Forsyth County, everybody up there does. How Charlotte, if anybody's on here from Jacksonville, I think the city of Jacksonville has a pretty good down payment assistance program. So you can stack these DPAs. We had a lender who stacked 6 down payment assistance products on one loan. Some lenders have access to Federal Home Loan Bank funding in addition to other things. And so you can get an imaginative lender and a community partner, and they'll go through and they'll look at your home buyer. If they're low, moderate income, they will find every source of down payment assistance that they can and make that house as affordable for your home buyer as they can possibly make it. So you have to go through a partner. That is the link to the website where you can find a partner in your area. And that money is cut from North Carolina Housing, so it does take a little bit longer to get that one processed and closed. If you think you have someone who's eligible for that CPLP, you want to do that before you show them houses. You want to get them to a community partner, have them pre-approved through that community partner before you start out taking them. They want a house that's 10 years old or newer. And so there's some specifics on that program that you want to make sure you get right before you get into it. I am not the expert on this. If you'll go to the next one, Josh Burton and Rich Lee are the experts on this product. So I want you to call them for more information because they're the ones who can give it to you. So we'll go to the next slide and we're going to talk about the $8,000 in down payment assistance. So our regular Home Advantage mortgage is the HFA preferred product from Freddie Mac and from Fannie Mae, and FHA, VA, or USDA financing. If you're getting a loan and you're getting down payment assistance or a standalone, if it's coming through North Carolina Housing, then it's going to be called a Home Advantage loan. So our regular Home Advantage that we talked about first is a mortgage-backed security, and it's sold on the secondary market, and it's pretty easy. It doesn't have to be a first-time buyer, no sales price limit, no household income limit, application limit of $92,000. Now, the NC First Home Advantage mortgage is funded differently. It's funded with mortgage revenue bonds, and that is a federal program. Those mortgage revenue bonds are federally tax exempt. And, you know, when the federal government gets involved, and sometimes things get a little more, you know, red tapey. And so that are in mortgage revenue bonds, I like to think of standing as rules, regulations, and maybe some red tape. So it has some more requirements. First of all, whether your customer buys an $80,000 home or a $180,000 home, they're going to get an $8,000 down payment assistance. And that down payment assistance that we offer can be used just for down payment, or it can be used for down payment and other closing expenses. This is going to have a limit on the sales price of $290,000 no matter where you are in the state, and it's going to have a family income limit. And that family income is going to be determined by how many members of the family. There's one limit for 2 or fewer. There's a higher limit for 3 or more. And then it's based on what county you are in. So you want to go to the site on North Carolina Housing's website. You're going to want to pick up the county, type in your county like Mecklenburg or Wake, and or New Hanover or Beaufort or wherever, Martin County. You're going to put in your county, and it's going to bring up the income limits for that county. The sales price limit is going to be $290 no matter where you are in the state for the NC First Home Advantage mortgage. Okay, what's next on that other slide? See if I'm ready to go. So follow all the NC Home Advantage rules. So that means that it's got a 43% back ratio max. It means that it has, you got to have a minimum 640 credit score. And then you have to follow the first time buyer requirement, the sales price limit of $290, and the income limits that are based on the county and the family size. We can only do new never occupied manufactured homes, but we do offer it on this product on FHA, VA, and USDA. And the $8,000 is available in all 100 North Carolina counties. Doesn't require any other additional special education, so it's not like the CPLP where you have to have that 8 hours. It's pretty simple, but your borrower does have to provide more information, a 3 years tax return history, not have owned a primary residence in the last 3 years. Okay, let's flip to the next one. Now also funded with mortgage revenue bonds, which means you can't combine it with the 8,000 DPA. You can combine it with our regular 3% home advantage, but you can't combine the MCC with the 8,000 because it's funded with that federal money, one slice of that pie. But the MCC to me is the greatest thing since sliced bread. So if your borrower pays taxes, so if their income is non-taxable, if they get Social Security income or disability income and they don't pay any federal tax on it, or if they get an earned income credit, they may not realize a tax benefit at this time. But if your borrower has any federal tax liability, now when I say tax liability, what I mean is they have a job, taxes are withheld from their paycheck. When they file a return at the end of the year, they may get a refund, but they don't get a refund for everything they paid in. The liability is the part the federal government keeps. Well, the MCC can offset that liability by up to $2,000 a year every year that your borrower owns and occupies that property up to 30 years. So if they live in a home for 10 years and they have the maximum credit of $2,000, they save $20,000 in federal taxes over that time. Your borrower cannot get the mortgage credit certificate unless they are first-time home buyers, and they must be approved for it prior to closing on their first home. If they don't know about this prior to closing on their first home, they cannot go back and get it later. So it's imperative that if you are aware of this option, that they investigate it prior to closing on their first home. They have to use a lender that's approved to work with North Carolina Housing. They have to supply more information. They've got to prove they're first-time buyers. It's going to have the same rules that the 8,000 does, $290 maximum sales price, family income limits, and that means all the borrowers, their spouses, any income they receive for dependents, and any title holder, their income will be included in family income. So if you're going to put their name on the title and they're going to live in the property, then we have to include that in family income, which is a benefit. We just changed that rule on July 1st, so that's not as strict as it was. Up to $2,000 a year, up to 50% on new construction, up to 30% of the interest they pay. So if you paid $7,000 on your existing home, 30% of that would be $2,100. The max credit is $2,000. The rest of it can still go on Schedule A as a deduction if it can help you itemize for deductions. The lender can help you use it for qualifying on a conventional product like the Freddie Mac HFA. We take that $2,000, if you divide it by 12, it works out to $166 a month. So if we took their income, let's say somebody made $3,000 a month, their ratios are a little high. You add $166 to it, now they make $3,166 a month, and that makes them qualify better. So that's a lender discretion issue. We offer a 4-hour CE class, of which this is an overview. You sit through our 4-hour CE class. We go over this in exhaustive detail, and you are then listed on our website as a preferred agent for the next 3 years. And we are going to start ranking you. We started in April, ranking you just like we rank the lenders on our site. You don't have to itemize to get the credit. If your customer qualifies for the MCC, it comes straight off the 1040. They don't have to do a Schedule A to do this. Okay, I'm ready for the next. Are only first-time homebuyers eligible for the mortgage credit certificate? And the answer to that is yes. And you can combine the MCC and the 8,000, and the answer to that is no, you can't. Okie doke. Let's go. Our programs are extremely easy. We have a statewide lender network. Normally, you can find our lender network on our website. We usually have a link there, and it ranks them as they come up. The higher they are on the list, the more that they've done. That's what we're going to start doing with you. Every time you have an offer to purchase that comes through us, whether you're the listing agent or the selling agent, we're going to start ranking you on our site if you've attended the Financing Dreams class and you're part of that, of our preferred agents. That 4-hour CE is also a requirement for the workforce housing specialist, and that one you can get a grant to help your customers out for closing expenses. Okay, what's next on here? If you want to learn more about us, here are some of our email contact information. You're going to get a copy of this webinar, so you'll be able to go and access all of our email addresses. And as you can see, mine is incredibly easy, Jane, plain Jane at nchfa.com. Okay, what have we got? Are we done now? We are done now. Okay, I'm here to answer questions. Thank you for your patience.
Jane, thank you very much. That was a great overview of North Carolina housing and where a housing finance agency fits into the lending ecosystem. You know, the genesis of the transaction, starts with the realtor and passes along through the lenders. And then it's important to know where a housing finance agency fits into that ecosystem before the loan eventually is delivered to an investor like Freddie Mac. And also, I like the quiz that you had. The answers flashed up. I wish I had them when I was in school. That would have helped me out to get along. But I know we just had a little technical glitch there. So with that being said, thank you, Realtors, for hanging in there with us. Now we have a very, very important part of the discussion, which is going to be handled by Monica LaCrue from our Realtor Engagement team. She's going to go over a lot of important resources and tools. And with that being said, from San Diego, we have Monica LaCrue. All yours, Monica.
Oh, good morning, everyone. Can you guys hear me okay?
Yes, you're fine.
Great, perfect. So to wrap up here, I'm going to share some important resources and tools that you guys can use to stay engaged. They're designed to both help you and your buyers as well. Am I still sharing the screen? It looks like, are you guys still seeing it?
Yes,
I'm on my other Zoom.
My home.
Okay, perfect. It's not showing on my other screen, so I wanted to make sure. Awesome. So My Home by Freddie Mac is a consumer-facing website that provides answers to common questions related to homeownership. The website has videos, infographics, and quizzes that your buyers can use to gain knowledge about the home buying process. The site's not branded, so it's a great pressure-free place for your buyers to explore. It's a great tool to use after an open house. When following up with those who attended, include this website in an email. Potential buyers can view at their own pace and without ads. It's also a great tool to use to fish for more buyers. Post this on your social media page. Remind your followers that you are the go-to when it comes time to buying a home. The website also has information for consumers looking to rent, refinance, or sell. All of the links will be available in the presentation after the webinar. So you guys can jot them down now, or you will be able to share them with you post the event. Freddie Mac offers many tools and resources to help you reach and educate first-time homebuyers. One of my favorites is Credit Smart. Credit Smart teaches consumers how to make sound financial decisions about homeownership. Not only does it highlight how to get ready to purchase a home, but it shows homeowners how to avoid foreclosure. There are 12 modules covering topics ranging from restoring your credit, closing on a loan, and avoiding credit traps. Credit Smart is offered through webinars or live trainings when we're allowed to do those again, and it's also available in 12 languages. Say you have a buyer who needs help saving for that 3% down. Freddie Mac has, in Credit Smart, there's actual budget worksheets that your buyers can download to create their own savings plan. Maybe you have a buyer who needs help restoring their credit. There's a whole module dedicated on how you can do that and make that possible. One interesting thing and exciting thing for real estate professionals is Credit Smart has a Train the Trainer program where you as a real estate professional can get certified to teach Credit Smart in your community. It's free to get certified and only takes 4 90-minute sessions. So if you follow the link here, you'll get more information about upcoming webinars that we're offering. I think the next training is going to be happening in October, so check that out for sure. In December of 2019, Freddie Mac created Credit Smart Homebuyer U. Like Credit Smart, it provides important education, but this focuses on the home buying process. It's free to consumers, it's self-paced and available online. I actually took it myself using my cell phone and found it very engaging and interactive. It's about 3 hours. You can start and stop whenever. So if you're on your lunch break and you want to do, 30 minutes, you can pick it up when you get home from work that same day. One important thing to note about Credit Smart Homebuyer U is that it satisfies the homebuyer education requirement for buyers seeking to use Home Possible or Home One. As soon as they complete the course, they get a certification that goes straight to their lender of choice or you as their real estate agent to be saved in their files ready for closing. Again, another free tool for you and your buyers. Freddie Mac works with 14 HUD-approved counseling agencies across the country. These centers work with potential buyers to help prepare them for responsible homeownership. I encourage you to look up the one in your market. Not only are they a great resource for you to send your buyers to get more information, but they are training the future buyers. You want the people who work here to know who you are. Also, in today's COVID-19 climate, these centers are a great resource helping struggling borrowers with Freddie Mac-owned mortgages avoid foreclosure. We talked a lot about down payment assistance, and we heard it's one of the largest barriers to homeownership. We have partnered with a company called Downpayment Resources. They're a consumer-facing website where buyers or even you can go to learn more about down payment assistance in your area. I encourage you to visit the website and enter the address of one of your listings. You may be surprised to learn the house you're selling may be eligible for free money. Freddie Mac has partnered with our sister company, Fannie Mae, and our regulator, FHFA, to create an online industry standard clearinghouse of translated documents. Together, we have translated over 500 documents into Spanish, traditional Chinese, and Vietnamese. We're continuing to do work in this space with Korean and Tagalog languages coming soon. It's a free resource for your buyers and you as a professional. As we saw earlier, the demographics of future homeowners is changing, and it's important for us to provide tools like this to make home possible for all. I encourage you to visit the website and learn an industry term in a new language. Okay, I want to turn a bit and focus on some of the the tools and resources that can help you as a real estate professional. The housing market is always changing, and it's important for us that you stay up to date with news and information. Freddie Mac can help you do that. We have provided some ebooks that feature Freddie Mac data and insights that showcase needs and opportunities in the market. Also, our Affordable Lending Insights page is a great website to bookmark. It has quick read articles covering perspectives on the behaviors and trends driving the housing industry. These insights can be shared directly from our website to your social media pages. They will highlight you, these free resources will highlight you as a trusted advisor and important thought leader in the industry. And again, these links will be available after the webinar. Late last year, Freddie Mac launched our Single Family Home Starts Here podcast. The podcast provides an opportunity to spotlight industry topics, opportunities for growth, and perspectives on Freddie Mac thought leaders. On the latest episode, Mike Zaro from Truist and Freddie Mac's Dawn Griffin provide insights on how the payment deferral solution helps servicers, borrowers, and the evolving industry. It's no secret that mortgage forbearance can be a huge source of relief for homeowners who are affected by COVID-19. However, there's confusion about how and when they are expected to repay the delayed payments and what happens at the end of the forbearance term. Listen to this latest episode to learn more about what Freddie Mac is doing to help. There's a lot more podcasts available. They're no more than 20 minutes, so please listen and subscribe. I want to remind you that everything we cover today is free to you. We don't sell anything. We can't market to your buyers. We are truly here to be your partner to make home possible. So we ask that you stay connected by subscribing to our Real Estate Professionals Resource Center. What we share in our emails are key insights, upcoming events, and other, thought-provoking articles for you to read. To subscribe, visit FreddieMac.com/real estate pros. When you get there, scroll all the way down to the bottom of the page. There'll be a little box. Just enter your email address and click subscribe. Thank you so much for your time today. I really hope that we provided some actionable takeaways that you can use to reach more buyers and grow your business. You are the critical link in the home buying process. You are the trusted advisor. You are the one making the dream of homeownership possible for so many. We are your cheerleaders on the sidelines watching. If you have any more questions, please feel free to put them in the chat now, and we will follow up with you afterwards. Thank you.
Thank you, Monica. Again, great information. All those links that Monica went over will be provided to you. We will be sending this information to Rachel and North Carolina Realtors so they can post it on their website and distribute it to you as they see fit. At this time, if we can have all the panelists turn their video on and and unmute their lines. And Rachel, if you could, monitor our chat box and Q&A box there and moderate some questions for us, we'd be glad to answer them.
Absolutely. And before we dive into that, I just want to say real quickly that I know that we're at time and some of you who are attending might need to hop off the call. So again, I just want to reiterate that we are recording all of this and you all will receive a copy of the recording that will also include the answers to everything that's been submitted in the Q&A throughout today's session. So with that, we've got about a dozen really great questions that I want to cover real quickly. With the first one being from someone who submitted this question prior to the actual webinar. They were asking, can a real estate investor's clients use Freddie Mac products, or are they only for the actual home buyer as a primary residence? Let me add that.
Okay. Can you repeat that again? I'm not quite clear on the...
Sure. So, I'm sorry, I was just going to say, so someone had asked if a real estate investor can use Freddie Mac products.
For a single family, are they using it for business or it's just for investment purposes?
They didn't clarify, but it sounds like it's probably for investment purposes to be used maybe as a rental house.
Freddie Mac used to have they have an investor program. Didn't 20% down?
Yeah, Home Possible wouldn't necessarily fall into that, but we can clarify and follow up on that question.
It wouldn't be Home Possible, but it would just be your regular conventional product.
Right, it wouldn't be the affordable products that we covered today.
Yeah, it wouldn't be.
Wonderful.
We can find out what additional programs there are there for you for that question.
Okay. And then Jane, this one's for you from Patrick. Patrick says the last time he checked, the Housing Finance Agency had stricter guidelines with Freddie than with Fannie. Is that going to change? Has it already changed? Can you give us just a general update on that?
I saw that as it came through, and what it seemed to me that his question had to do with the 80% AMI. We don't offer Freddie Mac on our conventional products. We don't offer them over 80% AMI. And I think that it just has to do with the cost, because there's a price break at 80% AMI and under. Not only do you get the charter level PMI, but there's a price break, and over 80% AMI, it wasn't it wasn't cost effective for a buyer. But I'm not sure about that. Or is the HFA product limited to 80%, Jim? Do I just not know the right answer?
Well, the Housing Finance Agency determines if they're going to do the over 80% AMI. So really, that's North Carolina Housing call. So it is offered, but again, we don't dictate that to you.
Okay, let's see. Next question. I think this one was specifically for Jim. Jill asks, when you say there are no reserves required with HFA Advantage, does that mean no down payment on HFA?
Again, when we say there's no reserves required, we will then defer to the Housing Finance Agency for their reserve requirements. So, Jane, can you clarify, do you have reserve requirements?
No, so when you're asking about reserve requirements, what you mean is after you don't have to have your own money for down payment, you can get down payment assistance. Reserves means you have to have any money left over after closing. And even though it's an incredibly good idea to have money left over after closing, we don't require it.
Okay.
Wonderful. Okay, so I've got two questions that are specific to Home One. The first one is a first-time home buyer defined as no property ownership in the past 3 years, or is it a true first-time home buyer?
It's the traditional definition in the past 3 years.
Wonderful. And then the follow-up question to that is Home One a 3% down payment?
Yes.
Yes.
Yeah, all three of our affordable programs, Home One, Home Possible, and HFA Advantage are all 3% down, 97% LTV.
In addition to that, the Home One doesn't have any income or geographical limits.
Okay, wonderful. Let's see here. The next three questions all relate to the North Carolina Home Advantage mortgage, Jane, that you were talking about. The first one is, what are the stipulations on all loan types? For example, what are the stipulations on your DPA programs and regular loan products?
Well, if you're asking, we've got a minimum 640 credit score, 43 back ratio. There's not a sales price limit for the regular Home Advantage. For the first Home Advantage, it's a 290 sales price limit, and then the income limits vary based on, but the 640 credit score stays the same, the 43% back ratio stays the same. I'm thinking that's what they're asking.
Perfect. I think so. Let's see here. And then what is the minimum income to qualify for this?
You just have to be able to qualify. There isn't a minimum income limit. You just have to have sufficient income to be able to repay your payment. So that's what the lender does for you. It says, I make $20,000 a year, then I can afford a $30,000 house or a $40,000 house, depending on what and with interest rates at 2%, you can probably afford an $80,000 house.
Take advantage of it while you can.
Yeah.
Doesn't happen
your
too
taxes
often.
And insurance are going to be higher than your house payment.
Exactly. And then this, one of our attendees asked, while you were covering the DPA program overall, can you just give us one more just quick summary of what the DPA program is? I think they were having a hard time keeping up with what you were covering.
It was a little quick. You go to the Financing Dreams, you can sit through 4 hours of it.
Yes.
so on you get an FHA loan, VA, USDA, or conventional. And you go to the right lender who offers our products, and they identify you as meeting our guidelines. If you don't want to put your money out or you don't have money to put out, every FHA, VA, USDA, or conventional loan that you do through North Carolina Housing gives you the opportunity to use down payment assistance. We offer 3% on those conventionals, which basically give you 100% financing. You can get 3 or 5 on the governments, which will once again give you almost 100% financing or better on FHA loans, so that everybody has access to 100% financing. And then you can use other down payment assistance products. So if you're in an area like City of Raleigh that has a down payment assistance product, you can add them together and stack them up, which what happens is you wind up borrowing less money that you're paying interest on.
Exactly.
And that drops your mortgage payment.
Perfect. A follow-up question to that was, how does financing apply to self-employed income history client requirements?
that's going to be the same as it is across the board. So it's just whatever the lender qualifies, typically 2-year history, average income that shows that you're going to be able to repay the mortgage. Lenders look for reliability of income. They look for a history to show that you've received it, and then they want to think you're going to get it for 3 more years.
Perfect.
Barring COVID.
Yes. Jane, is there any way that you could provide us a link that we can include in our follow-up email to everyone that gives more information on the upcoming CE classes that you were discussing?
Yes, we've got a Train With Us on our website under the Realtor page. I'll send it to you, Rachel.
Perfect. Thank you. Quite a few people asked about that. Let's see here. We've got a couple more questions that came in while everyone was covering these first round of questions. Let's see. Cynthia says, our firm supports most of the DPA programs discussed today. Since the new NC offer to purchase contract requires us to check the DPA box on the contract, we are seeing many offers rejected. Is it possible to help getting that box removed from the offer to purchase? And that might actually be more of a question for the forms committee at NC Realtors. So I'd be happy to pass that along to them to see if we can't get more information on that specific question, Cynthia. Let's see here. And this member says, I may have misheard, but just to confirm, the DPA grant is forgiven after 15 years? Or is...
Yes, so not a grant, loan. We don't ever refer to it as a grant because that will get us all in trouble. But it is forgivable over time. It starts forgiving in year 11 and it goes away completely after year 15.
Perfect. And can an HFA loan qualify for NC HFA programs like First Time or Home Advantage?
Well, the Freddie Mac HFA program is what our HFA Advantage conventional program is.
Gotcha.
It's like baking a cake. There are tons of layers that go in with this, right, Jim?
Yes.
We just take all of our rules and we add them all together. And always, if you're dealing in multiple layers, take the worst thing. That's what applies.
And we hope that cake tastes good.
It's delicious. But now I'm going to tell you now, the truth is a conventional loan on the HFA product, that's an incredibly good product. And if you do the $8,000 down payment assistance and you've got a fairly, say $150,000 sales price, you can pay off the monthly mortgage insurance. And your customer can get a principal and interest payment, taxes and insurance, no monthly MI, which is that's a buy. That's a great buy for a customer.
Absolutely. Let's see here. So, Jane, I think this one's still for you. Can the buyer buy down their interest rates if they use these products?
No, what we post on our site, and the lender will use our rates. They're posted on our site. Nothing on our site is password protected. Go to nchfa.com. You'll find the interest rates there, and that's what you have to use.
And let's see, Jane, is there a cost or a charge for the training certification to be a referred agent?
Typically, we charge $30 for realtors when we do the in-person class. Of course, we were COVID prohibited. We're doing synchronous classes right now, and we're being hosted by boards. And we are asking that the board collect a fee, because now I don't want to hurt anybody's feelings, but if y'all don't pay, you don't show up. So we like you to pay. So you pay, but they are donating that money to either the Realtors Housing Foundation, or in Charlotte, they'll be, Charlotte, Mecklenburg, they'll be doing it for their Housing Opportunities Foundation.
Wonderful.
We did one with them. We've got one coming up. Jacksonville Board of Realtors is hosting us, and I think they're charging $25, and they're planning to donate it to the Realtors Housing Foundation, which you all just put $200,000 for COVID relief out of the Realtors Housing Foundation.
Yes,
yes,
that was huge. That was huge. Let's see here. I think we've got just one more, and some of these, let's see, I'm having trouble deciphering exactly what they're asking for. So does DACA qualify for these programs for all of them? If so, is there any limitations?
FHA says, no, we don't have any additional limitations. If it meets Freddie Mac guidelines, we take it.
Perfect.
Right,
Wonderful.
for you guys, and you guys take it, right?
Yes.
Guys are answering me saying yes?
Yes.
Yes, they take it.
Perfect. So I think that, let me double check our chat field. Let's see here. Okay, one last question and then we're gonna wrap everything up. So Andrea wants to know, speaking with thoughts on COVID, a lot of people have been without true employment since March or April, only funds from PUA and unemployment. Can these people still qualify?
So that is a lender question. You've got to go sit down with the lender. All of the loans, you go to your regular lender, so call your regular loan officer. They'll tell you if their income has been sufficient. If they've gone back to work, what they're going to be looking at is, is their job now stable? If they're back at work, from what their old jobs were and they're back in, then I would think they just pick right up and move on. The bigger issue, of course, is for people who suffered the financial hardship and how did it affect their credit.
Absolutely, absolutely. Thank you all. So before I wrap everything up, I just wanted to see, Jim, do you have anything else you want to cover with the attendees?
Well, I'd just like to thank everybody for attending this today. The importance of our partnership with North Carolina Housing, and for you realtors out there, hopefully the lenders that you refer your buyers to are taking advantage of North Carolina Housing's programs. Ask them if they offer it. If they don't, ask them why they don't. And then if they don't want to, please find another lender that does, because North Carolina Housing provides, tremendous value to your marketplace. And to have that in your toolkit will only help you. And also, we hope that the information that Marlena and Monica shared with you today also enriches your your quest to find that next home buyer. And with that, Marlena and Monica, do you have any final comments you'd like to make?
No, thank you so much again for having us. It was a wealth of knowledge that was shared today. And if you have any questions, I do manage the realtor relationships here at Freddie Mac along with Monica. So if you have any questions, please don't hesitate to reach out.
Great.
Thank you all.
And Rachel, we can't thank you enough. You did a great job in promoting this and bringing a great audience to us. And we look forward to doing many more in the future.
Thank you so much. I know NC Realtors and all of our 350 members who joined us today very much appreciate all of your time. So thank you to all of our panelists today for bringing such great information on financing options to all of our members. We really hope that these resources are going to be impactful for everyone who attended today, and that this will also help bring new purchasing opportunities for all of our members' clients. So just as a quick reminder, our session today was recorded. We're going to be emailing that to all of you by the end of the week, in addition to copies of the slides with all of the links, as well as some additional resources that we discussed today during the session. So thank you everyone for taking time out of your busy days. We appreciate you joining. And we look forward to seeing you all on upcoming webinars. So thank you, everyone. Have a wonderful afternoon.
Bye. Bye-bye.
Bye.